Hey guys, Credible Crypto here. It's been a long time since I've made a YouTube video. Just been very busy with work, so I haven't been able to make them as often as I'd like. That being said, I decided to make one here today because I posted on my Twitter about making one, and there seemed to be a good amount of interest in watching a video about my last play that I made, which I did post about constantly on Twitter, as well as what I expect to happen now. So in regards to the last trade that I made, it was posted on Twitter, and I did my best to explain my thoughts and my reasoning behind the actions that I was taking as I constantly updated the Twitter threads. However, I think making a video would allow you guys to understand exactly what I was thinking at each moment of the play and why I adjusted my stop losses, moved my entries, moved my exits the way that I did. And so I think it would be a good idea for me to show you guys exactly what my thought process was throughout the entire scenario, so you guys can better understand how I utilize Elliott wave theory to find optimal entries and exits as well as invalidation points. I think that's the biggest strength of Elliott wave for me. It may not always be very easy to use, but oftentimes it can give you great entry and invalidation points, which I'll be demonstrating to you guys in this video. All right, so to start off, I'm going to show you guys the bigger picture of what we were looking at, and then we're going to work our way down to the smaller time frames to show you how I took the trade that I made. So this is the bigger time frame, and this is off my Twitter. This is a post that I made on, looks like September 23rd. Is that September 23rd? Yeah, September 23rd. So it was, let's see, about 2 weeks ago I made this post. And basically what we were seeing was, in the grander scheme of things, we were seeing a consolidation pattern over the last, looks like from July till today, so about 4 months, a consolidation pattern of overlapping waves, as you can see here, and consolidating to reach an apex. We had a upper trend line acting as resistance with a downward slope, and we had a lower trend line acting as support, making an upward slope, and those two trend lines were reaching an apex right about here, at which point we'd expect a decision to be made, either up or down. All right, sorry for the interruption, guys. So as I was saying, we've been in this consolidation pattern for about 4 months, nearing the apex here, and based on these overlapping waves, it looked to me like it was a triangle formation. I mean, obviously it looks like a triangle. The overlapping waves make it seem like a triangle. So based on that, I came up with two counts, because I always want to keep in mind both alternatives, one being a bearish count and one being a bullish count. It's always good, although I was leaning bearish, I have been leaning bearish for a very long time, it's always good to keep in mind an alternate option, so if things don't go the way that you're expecting them to, you're not blindsided, and you don't make emotional decisions on the spot. So what you're seeing here is, this is the bearish scenario, and that's that this triangle is an A, B, C, D, E triangle that would eventually end up breaking down, and over here, this red line is the invalidation point for this bearish scenario. So based on Elliott wave rules, triangles are made up of 5 waves, A, B, C, D, and D. And the fifth wave, which is the E wave, is allowed to overshoot the top of this trend line here, or it's allowed to fall short before it completes, and then we break down. So the other waves should touch the upper and lower trend lines. However, the E wave is allowed to either go above the upper trend line before it completes, or fall short of it before it completes, and then we should break in the opposite direction. So in this case, the E wave was heading up, which means we'd expect to break downwards in this scenario. Now, the other rule that we have with Elliott wave triangles is that the E wave, although it can go above this upper trend line, it is not allowed to go above the end of the C wave. So the absolute max that this E wave could overthrow this trend line by is up to 7,433, which is where our C wave is. So that becomes the invalidation point for this count. If we were to see a break above this trend line, and then we were to cross this level here, it would mean one of two things. The first thing it could mean is that this was actually not a triangle formation, or the second thing that it could mean is that this was a triangle formation, but that this wave down was the E wave, and we ended up breaking up upwards after the formation completed at the end of this wave. So in that case, this is what the triangle would look like in the bullish case. Now in this case, as you can see, we have our A wave starting from up here instead of down here, and that gives us A, B, C, D, E, and then we'd break up above the last high of about 7.4 thousand, which was right here. So in this case, which is the bullish case, the E wave is now not allowed to go below C again. So 61.13 is the invalidation point for the bullish case. And we'd expect to make a dip and then break upwards here. This dip would either fall short of this bottom trend line or overthrow it by not much more. Again, it can't go below 61.33. So it might break past it, but it shouldn't go below 61.33. And then we'd end up seeing a move upwards. Now notice on both of these charts, they're drawn at the same time. So this price action that you're seeing here, this E wave that you're seeing here, is actually this D wave here. So in the bullish case, we'd have one more tap off the top trend line. We'd retrace a little bit, then we'd break upwards. Whereas in the bearish case, we could fall at any time down the bottom. So that's the bigger picture. And then we're going to zoom in and analyze the smaller, shorter term pictures to find out how to play this here. But basically, in the bigger picture, in the grand scheme of things, we have two levels that we want to look at, about 7.5 thousand and about 6.1 thousand. A decisive move over either of these points would flip me bearish or bullish pretty much completely. So above 7.5K would make me bullish, and below 6.1K would make me bearish. So now we wanted to find out what's the best way to play this so that we can get a good entry regardless of whether or not this breaks bull or bear. So this is going to take us to the next chart, which is actually going to be an analysis of this wave right here. We're trying to find out, is this actually the E wave here, or is this actually the D wave here? Because that'll give us a better idea of whether this triangle is going to break up or down. Alright guys, so this is another chart that I posted on Twitter, and in this case, I just brought those bearish and bullish invalidation points and threw them all in one chart to make it easier to see exactly what we're looking at. So this chart shows both the bearish invalidation points and the bullish invalidation points. However, notice that the triangle is drawn as if this was a bearish triangle that's going to break down. I drew it the way that I'm leaning towards, which was an A, B, C, D, E with a breakdown at the bottom, but I've kept the bearish invalidation point in play so that I can keep in mind that if this does go above this level, we're likely seeing the bullish triangle, which isn't pictured here at the moment. Another couple of things that I noticed was that we have this triangle forming on RSI as well, which had also reached resistance at this point. So I was expecting, as you can see, it hit the top of the trend line, hit resistance on the triangle. I was expecting this to break down from here. We're also at this horizontal resistance of 6.8 thousand. As you can see, the last 1, 2, 3, 4 times that we hit that level, we rejected from it. Of course, we did break through here, and then we did break back down over here. And then we failed to break through here again, broke through, dump right below, again failed over here. So that 6.8K level was a historical level of resistance. So in this case, I was very bearish at this point because not only had we hit that historical level of resistance and failed to break through, we had also hit the top of our RSI resistance, and as you can see, volume on this prior dump was greater than the volume on the rise that followed after. Now, one thing to keep in mind is generally in triangle formations, as we reach closer to the apex, the volume does tend to decline. So there can be a counter argument to this argument here, and someone could say, oh, well, volume is just declining because we're moving further down the triangle. That's completely valid. So this is not the only thing that I looked at, however. As you can see, I was looking at a few other factors that were kind of making me lean even more bearish at this point. So that's what this chart is showing, the bearish and bullish invalidation points. The next chart that I'm going to show you guys is going to go even deeper into this particular E wave here and try to analyze that on a more micro level to confirm my bias, to confirm my bearish bias, or find if I could see any more bullish signs in this wave to make me flip bullish. All right, guys. So this chart is we zoomed in on that E wave that you saw there, the E wave, and I'm trying to count the E waves. So as you can see, this E wave seems to be making a very nice channel here. If you've seen my past work, you know that corrective waves in Elliott wave tend to channel very well. So that's one way that we can identify a corrective wave, is the channeling and the overlapping of the waves. Impulsive waves usually are trending with higher highs and lower highs, and they don't tend to overlap like this over here. So this looked very corrective to me, and I noticed it's making a very nice channel, respecting the median line very well. The arrows indicate areas where we bounced off the median line, and it looked to me like we were making a WXY complex correction with the final leg, the Y leg, forming a triangle again, which is interesting because one thing that we know in Elliott wave is that within a larger triangle, the final E wave also sometimes tends to become a triangle. So you'd have a smaller triangle within a larger triangle, and that can help you identify that what you're seeing is actually, a triangle, an Elliott wave triangle. So that's one thing that we look for. The other thing is that whenever we have complex corrections like this, triangles cannot be leading. They cannot be the first wave in a complex correction. They can be the middle wave, and they can be the final wave. So this also played along with the idea that we were seeing a complex correction ending with this Y wave, and then we'd see our move down. Now keep in mind, in the bigger picture, we're right up against that trend line, that 6.8K trend line that I just talked about. So it makes sense that we would dump from this level. So everything here was making sense. We had a clear, valid count, a nice channel, forming a triangle as the last pattern in this corrective move, right up against resistance. Everything was telling me that, hey, we're going to be breaking down. So from here, the bullish, the BTC count got a little bit unclear, and I'll show you guys that in another chart. But it did start getting a little bit unclear, wasn't as easy to decipher. So I took a look at the Ethereum chart, and that's what I'm going to talk about next. Is the Ethereum chart was actually showing us a much clearer picture of the correction, and it's kind of what I played off of after this BTC count started getting a little bit unclear. But just to show you guys what I was explaining here, again, above 6.8K invalidates the bearish count. If you remember from my past chart, that was the invalidation point, 6.8K. So that's something that I was watching very carefully. Below 6.3K means that we have likely completed this structure, and we may be headed down. So 6.3K at that time was the area that I was looking to short, because losing that would likely mean that we've broke down below D. Our E wave has broke down below the D wave, and confirmed that we are in fact falling lower. Now keep in mind, as I was seeing this at that time, I was seeing it as a ascending triangle because the C wave reached so high up close to this A wave. So I was expecting this last wave up to be our D wave, and then we'd fall through. Again, I'm going to show you guys the next chart, which is going to show you the Ethereum count at the same time. Alright guys, so here's the Ethereum chart at the same time that we had that Bitcoin chart. Now Bitcoin started to get a little bit unclear after that triangle that I just showed you. The waves weren't looking as clear as I'd like them to. So I turned to Ethereum to see if I can make sense of that count. Now keep in mind, wherever Bitcoin goes, Ethereum will tend to go as well. If Bitcoin goes up, we'd expect Ethereum to rise just like all the other alts. And if Bitcoin goes down, we'd expect Ethereum to dump just like all the other alts. So the idea here was that if we could find out what Ethereum was doing, then we might have an idea, it might give us an idea of what Bitcoin would be doing, and vice versa. So looking at the Ethereum chart, the same situation happened. My last major short, as you guys may be aware, was at 270. I shorted Ethereum at 270, and we saw this massive dump. This I believe to be the first major wave down of a new 5-wave structure down. If you guys, again, remember my prior analysis, the reason that I shorted 270 was because we had a triangle forming here as well, which isn't pictured here, but this was a triangle forming, and 270 was the bearish breakdown and validation point. Very similar to the type of triangle we have going here, but that's how I shorted that level, caught that short, and now I was seeing a retracement of that last drop. Now again, this retracement, as you can see, is very choppy, so I was expecting it to be not an impulsive move, but rather a corrective move. And what I was seeing was two possibilities. The first, the bearish case, and we'll talk about the bullish case right after. So the bearish case is going to be a WXY formation, W being an ABC correction, our X being another ABC, and the Y looking again like a triangle. We have an upper sloping trend line, a downward sloping trend line reaching a apex. So this again looked like a smaller triangle taking the shape of the Y leg of this WXY formation. This would be the bearish case. Now in the bearish case, we're nearing the apex of this triangle. Just as Bitcoin is right around 6.8 thousand, so is Ethereum nearing the apex of this smaller triangle, and I believe that a move was imminent. So in this case, we had made in the bearish case, an A, B, C, D, E, right? We're currently working on our E wave. Now again, the same rules apply. E cannot go above C. So in the bearish case, we would go no higher than $240 before we end up crashing down. At the same time, we know that the E-wave can go above this level, but it can't go above this level, which is why I made this red box as the optimal short entry. This would be the best risk to return ratio entry that you could get in this scenario. And the reason for that is because we have a clear invalidation here at the C level. At the 240 level, it's our clear invalidation. So our stop losses can be set at 240. So what's the optimal entry? Well, it's as close as you can get to 240 for a short. Knowing that we can overthrow this level, and knowing that if we do overthrow this level here, we can't go higher than this level here, it makes this the perfect short opportunity. So I told my followers, this was on October 3rd, about a week ago, look for a throw over into this zone, because number one, as we know, only the E wave can overthrow, which would make this bearish case very likely because we're seeing an overthrow, which means it's likely the E wave, and we know that triangles break in the opposite direction of the E wave. So look for an overthrow in this territory, and if you want, you can short 232 to 238 with a stop loss at 240 because that's the invalidation point. Now, on the flip side, if you want to be more conservative, right? So let's say this count is completely wrong and we end up breaking up and going a lot higher, and you don't want to take the risk of getting stopped out. The other side would give you a conservative short with a stop sell at 213.75. And the reason for that is because after we complete this E wave, whether or not we overthrow here, we should come crashing down. And once we come crashing down and go below this D wave, it confirms this triangle breakdown. So the D wave, dropping below this D wave would confirm this breakdown, which means that if you want to be conservative, you can set short sells to activate once we drop below 213.75. So that's the bearish case, and then we continue the downtrend from here. Now the bullish case, again, I was leaning bearish, but it's always good to keep in mind both situations. The bullish case had Ethereum in a WXY. However, in this case, instead of the Y wave being the triangle, the X wave was a triangle, and this W was this move here. So in this case, the A would start from above. We get an A, B, C, D, E, and then we break upwards for a Y wave, which would again tap this 270, 280 resistance before continuing down again. So now in this case, the move up was not actually the E wave, it was the D wave, right? And what I said here was, look for a bounce off this trend line. Remember, the D wave should not overthrow, so look for a bounce off this trend line. Look for a retracement, and then long when we break above that level again, because that would be the bullish confirmation in the bullish case, right? So 230.24 in that case. So I said long a break above the D wave top once the E wave completes. In other words, wait to see the top trend line tested, wait to see some retracement, then long a breakout once we cross the same dollar level that was tested earlier. And then I was planning on catching this long up to about 270, 280, 290, and then I was going to flip short for the short over there. So that's the bullish case. So I've outlined both the bearish and the bullish cases. All right, guys, so this is the next chart. So what we see happened here was we did end up spiking and overthrowing into my red zone. Now, my sell orders did not get filled here. We went to about 232, I think, and I had stacked orders at, I believe it was 235 to 238. Also, I wasn't on the Bitfinex exchange, I was on the Kraken exchange. And on Kraken, as you'll see in a second, we never actually hit this zone. But for Bitfinex, we spiked up into the red zone, which again is the ideal short zone, and this made me again even more bearish. However, if we look at the Kraken exchange, so this is where things get a little tricky. If we look at the Kraken exchange, we never actually overthrew. So on Kraken, we hit the top trend line. These were again drawn at the same point in time. So on Kraken, we hit the top trend line. On Bitfinex, we overthrew. So because on Kraken we didn't overthrow, it made me a little bit cautious. I said, okay, yeah, on this exchange we overthrew, but maybe that was just some volatility issue. In fact, at this point in time, Bitfinex servers actually went down. So there was some increased volatility, which may not be the norm and may be an anomaly because the servers were down. So it caused some extra volatility. So because we didn't see that overthrow on the Kraken exchange, I was still cautious. I wasn't 100% that the bearish case was playing out because I didn't see that overthrow that we got on the prior exchange. So at this point, I was still a little bit cautious. So yeah, so I was still a little bit cautious, and we're gonna go ahead and now forward to the next chart, which is gonna show you an update of what happened next. All right, guys, so this is the next chart that I have to show you guys, basically what happened next. And this is on Bitfinex. On Kraken, however, it looks pretty similar. Basically, we spiked into that zone. We ended up dipping a little bit. And if you keep in mind from my bullish chart, let me actually pull it up and show you guys. Yeah, so here's the bullish case. So if you keep in mind on the bullish case, I said wait for a tap off this top trend line, wait for the retracement, and then long a break above. So very actually interesting what happened here. So I had set some sell orders once we dipped down here. I had set some sell orders above this last high. Anywhere from, I set some long orders above this last high because I was following my own rules. Set some long orders above this last high, and we ended up wicking right into my first long order, and then we ended up dropping below it, and I did get filled there, and then I immediately moved my stop loss below this last low here at 220. So I put a stop loss on my long at 220, and what happened here was actually very interesting. So as you know, in the bullish case, I set the long a break here, And it should have been a strong break. We should have got an impulsive break. We didn't get that impulsive break. But by the time I woke up, I already had one order filled, and I said, hey, you know, forget it. Let me just let it ride. I'll set a stop loss here, and worst case scenario, we dump. I still have my shorts set here. We'll trigger those shorts, and I'll make up any losses that I take here on my shorts. So I kept the long there, and I set a stop loss, and I still had my stop sells set here now, in case we reverse the other direction. And lo and behold, that's exactly what we did. So we tapped there, and then we dropped down. My stop sells did get triggered, and I'll talk about that in a second. But I want to go over this move here, which is what really kind of trapped that one order that I had. So as you know, I said we should expect a tap here, a tracement, and then a breakthrough. And what we actually got was a tap here, a tracement, another tap, and then we ended up breaking down. As you can see, this high went over the last high, which actually tells me that this entire move here was actually the E wave. So if we go to our bearish scenario, this shows it quite well. This entire move up to here was the E wave. Initially I thought this was the E wave and that we'd be moving down. However, this was the E wave. As you can see, it did overthrow right into my red box, did not exceed the C wave, and proceeded to dump down. What happened was I did get tripped up by this first tap, this retracement, and it did trip me up, and I did get a long filled here, and I kept it. So that was a little tricky. However, because I had prepared for both directions and both possibilities, it ended up not making much of a difference. My long order got filled at 229. I didn't exit it, even though when I noticed this wasn't an impulsive move, I should have exited it. Set the stop loss below the last low, which was at 220. Got stopped out. Now, ideally, if you were following me on Twitter, at one point I did move my stop sells or my shorts up from 214 up to 220. I tightened them a little bit. And the reason for that was because after making this overthrow here, breaking the last low would have told me that we've completed the E wave and we're heading down now. So actually the ideal short, conservative short, would have been at 220 at that point. And I had actually moved my short orders to 220. But when we got this low, I got a little worried. I think on a Bitstamp exchange, someone told me that it actually, when we made this low here on Bitstamp, we had wicked below. And then we popped back up. So I was a little concerned about keeping my stop sells so tight because I was worried about a wick down in case my analysis was wrong. I was worried about a wick down here, triggering my stop sells and then moving up again. So I moved my stop sells back down to the 214 point to play it safe. So what ended up happening was the long that I had opened at 229 got stopped out at 220. I left the stop loss there for that long. We proceeded to fall down, as you can see, very rapidly after we lost 219, dumped right past 214. All the rest of my stop sells got triggered at 214, and we immediately fell, and currently we're resting at about 196. So the loss that I took from my long position here, by the time we got back down to 210, had been made up already, and at this point I'm up about 3 to 4 times the loss that I took here. So I lost a few percent. I'm up 4 times that now at this point because my stop sells triggered here at 214. So again, very important to keep aware of both possibilities, both the bullish and bearish possibilities. All of these levels are pointed out to my followers. Like I said, my first chart was posted 2 weeks ago, and this chart, the Ethereum chart, was posted a week ago with the levels highlighted. So my followers are aware a week in advance of what to do. If they had followed exactly what I had said, they would have caught the short at 214 and would now be sitting in heavy profits. So now I'm going to talk about what I see happening from this point onwards. At this point, also one more thing actually I want to talk about is Bitcoin. I want to show you guys an updated chart on Bitcoin. I told you that it was getting a little bit harder to read, which is why I looked at Ethereum instead. But things got a lot more clear in Bitcoin by the time this price action had progressed. So let's show you guys that real quick. This is the Bitcoin chart. So what ended up happening was instead of it being an ascending triangle like I originally thought, we ended up making a symmetrical triangle. And we had a WXY like I originally thought, but instead of ascending, it was symmetric. So we had our A, B, C, D. Our E wave hit the top, didn't overthrow in this case, and then proceeded to break down. I did actually have stop sell set at 6.4 thousand for Bitcoin as well because the same rules applied. After we got this high, either we were going to break above this level, so I had buys set at 6.8, or we were going to fall down, and losing this last low of D would confirm that this was an E wave, and we had broken down, and so I had stop sell set at 6.4. Those also triggered. So I also had shorts that triggered on Bitcoin, which are now in profit as well. So both the Bitcoin and the Ethereum scenarios played out as expected. I did also have a bullish Bitcoin scenario, which was similar to the Ethereum one. We had a giant W here. This was the X, and we had a Y going up to about 6.1 to 6.2 before breaking down. I'm not going to bother showing you guys that one. It looks pretty similar to this one, except we had a W here, and this was an X wave instead of a Y wave. And the same invalidation points were there, long above 6.8 for that scenario, which we never got, so it never played out. But keep in mind, for both Bitcoin and Ethereum, I had orders set both above and below. That way, whichever direction we went, my orders would have been triggered. For Ethereum, the ideal long would have been above 240 after, in hindsight, seeing everything here, would have been above 240. That would have been the safest, most conservative long. The short level remains at 214. We could have tightened it to 220 here if you wanted to be a little bit more aggressive. And for Bitcoin, the levels were 6.8 thousand and 6.4 thousand. Now, in the bigger picture, if you remember from in the beginning of this video, I said 6.8 and 6.1 were the levels to watch. So yeah, 6.4 was the short level. However, breaking below 6.1, which was the last low here, would confirm the larger breakdown of the giant triangle that we had seen at the beginning of this video. So this 6.4 confirmed the breakdown of this triangle. However, losing 6.1 confirmed the breakdown of that giant triangle that we were in, that I showed you guys in the beginning of this video. So losing 6.1 was kind of the ultimate nail in the coffin for bulls, and it's made me 100% bearish at this point. 100% bearish. I fully expect that we're going to be dropping below 5.8K now. We will not see, in my opinion, higher than 6.7 thousand now before we see sub 5.8K. And so I'm holding my shorts for the long run at this point. My Ethereum shorts at 214 are currently being held. I plan on adding on any bounces. My Bitcoin shorts, I did just close right here at 6.2 thousand, and I took profits, and I plan on reopening them once we get a little bit higher in a bounce. However, it's important to note that at this point in time, because we've now lost 6.1K, any move above this last high of 6.8 thousand, or even actually 6,676, would be extremely bullish. So any move above 66.76, I would probably flip long. Maybe it's a reversal, maybe it's just a swing for a couple thousand points, but breaking above 6.7K is extremely bullish here. So I will be setting stop losses for my shorts right above here, which is the invalidation point of the bearish scenario. But other than that, I'm just looking for opportunities to short any bounces at this point. If we do flip above 6.7K, I'll flip bullish, no doubt about it. But until we get above that level, all I'm doing is looking to add shorts. On Ethereum, same thing goes here. The level that we're looking at here is 235, I would say. Above 235 would be bullish. If you want to play it safe, above 252 would be bullish. Any break above that level would make me flip bullish again. But until then, again, I'm just looking for shorts on the bounces here. So in the grander scheme of things, keep in mind, if we go back to the bigger picture chart, or let me just open up a brand new Bitcoin chart and show you guys what I'm seeing in the big picture. So in the grander scheme of things, keeping in mind that again, this was the triangle that we were in, the bigger triangle that we've now broken down from. I'm gonna draw it very roughly here, but you guys will get the idea. So this is the triangle that we were in, and let's see here. We got our A, B, C, D, E, and then we're now breaking down to the downside. So this is the triangle, and this was a consolidation pattern for the last 4 months. Whichever way this ended up going, whether it would be up or whether it would be down, whichever move it made, I would expect that move to lead to the direction that we're going to be in for the next 3 to 6 months. So I'm expecting a drop here below 5.8 thousand. There's two possibilities. I've written an article about this, which I'll probably post a link to shortly on my Twitter. But it talks about the two possibilities that I see this entire crash ending. And the first would be a quick wick below 5.8 thousand, maybe to 5.2 to 5.5, maybe even to the 4,000 levels, and then an immediate spring right back up that would catapult us into the next bull run. And the alternative to that is that we'd instead grind slowly down and make long lows, lower lows, and this bear market would extend for a lot longer than 3 to 6 months, which would be the very bearish scenario. But basically, at the conclusion of this triangle, whichever move was to be made, it ended up being bearish from my analysis that I just showed you guys. whichever move was to be made, I would expect that move to lead the way for the next 3 to 6 months. So shorts, I'm planning on holding for a longer period of time now because I'm expecting us to trickle down at this point. And at any point, if we get above that point of 66.89 that I just talked about, if at any point we get above that, I'll flip long, no doubt about it. So really, you can't really get much better of a short than what we got here. I shorted at 6.4 in Bitcoin with a stop loss of 6.9, and that's the invalidation point for the entire bullish scenario that I have set up here. And in the same way, Ethereum, I shorted 214. Again, if you caught this short in the red box, you caught what I think to be the best short of the next 3 to 6 months. However, if you took the conservative route and caught 214, again, invalidations would be up here 235, and or actually in this case it would be 223, and that's because we have a smaller wave count going here and we can't go above this level. But official bullish point would be above 235, and I'd flip bullish at that point and expect to make a significant move up at that point. So that pretty much talks about what I'm expecting to see now, guys. I'm expecting to see a further drop below sub 5.8K that I've been talking about for weeks, if not months at this point. I think it's final. We're finally coming to an end to this consolidation pattern, and this breakdown will be pretty drastic. If you guys have been following me on Twitter, you've caught the latest shorts, and congrats on doing that. However, if you weren't able to catch the shorts here at 214, we should get a bounce shortly, which is why I closed my Bitcoin shorts. But we should get a bounce shortly, and that might be the last chance to enter a major short position above 5.8 thousand. So keep an eye out for that. Yeah, if you guys have any questions about my analysis or the way that I came about it, if the video wasn't clear enough, I'm sorry. I talked really fast with this video. Normally I'm a bit slower, but there's a lot I had to get through, and so I talked a little bit faster trying to get through it all. If there's any confusion, if you have any questions about the analysis, feel free to comment on the video. I'll try and answer all the questions. And yeah, if you guys aren't following me on Twitter yet, I highly recommend doing it. As I said, I haven't posted a video on YouTube in a long time, and they're getting more scarce just because I don't have as much time as I used to, but my Twitter is constantly updated with setups like this one. So I highly recommend giving it a follow. I'll post a link in the description here at the bottom. Also, if you enjoyed this video, if you found it useful, please like and subscribe on YouTube so that you guys are kept up to date with all my newest videos. Subscribe to my notifications on YouTube so you know when I post my next video. That's about it for now, and I hope you guys enjoyed. Thanks.